Well, good morning, everyone. Welcome to the Real World Asset Tokenization session. I am Lawrence Wintermeyer. I'm the chair of Global Digital Finance. I think the two big things that might have caught many people by surprise this year are, one, the SEC approval of Bitcoin ETFs and BlackRock having probably the fastest selling ETF in history. There are 10 Bitcoin ETF, or actually ETP issuers. BlackRock then went off to set up a money market fund on Ethereum, and that whole space is now moving. The second bit was real-world asset tokenization. So I think many of you have heard Larry Fink talk about real-world asset tokenization or digitization being the next trend in the industry. The numbers that are bandied around in this space are really, eye-watering. 10 trillion, I think, to 2030 was the last estimate we had. So we're going to try to unpack that in the next 22 or 23 minutes. And I've got two excellent industry experts here to help us do that. And so, Stella, can I ask you to introduce yourself, please?
Thank you, Lawrence. It is with a great pleasure to be invited by ADGM to be here today to join all of you. Patio is a joint venture company by JP Morgan, Standard Chartered, Deutsche Bank, DBS, and Temasek. So we are headquartered in Singapore. It's a blockchain-based multi-currency clearing and settlements platform providers.
And Nick.
Yeah, thanks, Lawrence. It's great to be here. My second time at Abu Dhabi Finance Week. Great to be here speaking at the capital of capital. And really psyched to be here on FinTech Day. So Zumo is an OG crypto project originally in the UK with a direct-to-consumer offering where we built custody and self-custody and an exchange service and compliant AML, KYC procedures and a fiat on and off ramp. We pivoted a couple of years ago and we now offer that platform out to other digital asset firms, crypto firms, people offering things like tokenized real estate to help them launch fully compliant solutions in the UK. And at some point over this year, hopefully shortly, we'll be moving into the UAE to offer that exact same model. We also help, as part of that, companies in Europe be compliant with the regulatory regime around sustainability indicators, and that's one of the big incoming trends we'll see in the space, ESG principles being applied to the digital asset space. So we also have a business unit that helps companies comply with that.
Excellent. And this is a very straightforward panel. We have 3 questions for each of our panelists. We're going to look at the challenges, the barriers to greater mass adoption of digital assets. We're going to look at the innovations that you need to pay attention to and the stuff kind of rolling up 2025 and onwards. And then we're going to have a bit of a look at the future. So Stella, can I start with you? From your perspective, and then you've got the cast of tier 1 funders and partners in Partior. What are the big challenges or the barriers that we need to overcome to get digital assets into a mass adoption setting?
So as we all know that digital asset tokenizations of asset is not something for the future, but it's already happening, it's a reality right now. So you would have seen many of the, especially the tier 1 large financial institutions are launching various different type of and classes of assets over different type of solutions, platform, messaging. The liquidity itself is becoming very fragmented. And in terms of the solutions and platform, it is over various different type of messaging, standards, platform. Therefore, it has become a challenge in order to scale. It has become a challenge in order to, across jurisdictions where the policy can come together in terms of how they work together cross-border. So a lot of this aspect is coming together in order for the digital asset to scale up. We have to look at technology, we have to look at infrastructures, we have to look at the policy, we have to look at the messaging layer. So therefore, where Partio, what we are doing is really provide interoperable platform solutions for all the various different markets where they can come together to integrate their traditional TradeFi systems with DeFi systems in multi-phased projects to be able to support their traditional asset launching into the digital world.
And so I wonder if you could just give a comment on some of the asset classes, because you know in the community we've seen fixed income, intraday repo, has become really big, and I think this is almost driving what we'd call a treasury token market as well. But are there specific asset classes that are easier or more difficult, you think, lending themselves to tokenization?
Yeah. In our conversations and experience where we are helping our clients to process on the platform, there's so far there's no specific classes that is more difficult or easier, because this is where the technology. We heard about the video. We saw the video prior to our panel. It explained about blockchain. It explained about smart contract. It explained about how you can program all this policy, the rules into the contract itself, and how it can settle and clear and process the different classes. It's the method of how you will clear it in terms of 24/7 atomic settlements
Yeah.
in that process itself, and also how you want to diversify the assets, whether we need a domestic market or cross-border. It comes down to how do we work with our neighbor country or country in another time zones. How do we do the different time zones? So you mentioned about real-time cross-border. With the technology right now, they're able to do atomic settlement and not limit to follow the sun. So anyone in US and anyone in Asia with a 12 hours different time zone, they're able to do a deal over the blockchain technology.
I think that's a most important point, because digital custody or atomic settlement aren't the way that cap markets work now, even though the technology lends itself to doing it. So that is a big barrier, a sticking space. And Nick, if we look at the pivot that you've made in your organization, and we think about what are the barriers to adoption or some of the challenges we're coming up, what are you seeing in this context? And maybe can you give us a bit of an insight into this discussion or topic about interoperability and how this is all going to work?
Yeah, and I would look at that through two lenses. So interoperability of technology. There's probably far too many different chains out there at the moment, and there probably needs to be some kind of consolidation at some point and some kind of consensus over what will be used by large institutions, what will be used in specific regulatory situations, and I'm sure we'll see that as part of this cycle, some winners emerging, and hopefully the winners are the ones which actually have use cases, because there's clearly lots of blockchains out there at the moment which don't have any particular use case other than the value of the token. So I think that's one of the things we'll see in this cycle once the first bit plays out, is the chains which actually have utility beginning to work, and chains which can interoperate. So we're looking now in the institutional side of things at banks who've been using blockchain internally. How do they externalize it? How do they plug it into external systems? How do they use it for its real purpose? Things like cross-border payments. The other piece that I would say that kind of goes hand in hand with that is interoperability of regs. So a consensus globally around regulation for securities, real-world assets, crypto, stable coins. If you go back 2 years, there was almost no kind of consensus globally around that. And the good news is we're 2 years down the line and there's significant move forwards over the last couple of years. The MiCA or MiCA regs coming in Europe at the end of this month means that there will be a common set of regs across 30 countries in Europe. That's a huge step forwards. The FCA in the UK is moving towards a full authorization regime. Obviously, we're going to see this massive unblocking in the US with a kind of pro-crypto administration coming in, and management of the regulators changes. But I think having a consensus around how stablecoins are treated, having a consensus around how securities are treated, again, will lead to it's all that each part of it has a halo effect. So as institutions adopt, more institutions will adopt it. As there's consensus around technology, it becomes easier and there's less friction. There's less nuanced decisions to make around technology that probably not that many people really understand very well. They just need to understand what it does. And there's been too much focus on what the technology is rather than what it does. So hopefully we'll see that focus. You get that in new tech. The techies obsess about what the technology is. And actually all anyone really cares about is what it actually does. And we'll definitely see that change in this cycle as well. So I think that they're the kind of cornerstones of this: regulatory alignment across jurisdictions, more probably a set of technologies which everybody agree works and have utility, which can all work together with each other, and then institutions and retail customers having the confidence to join that en masse rather than the whatever it is 7 to 10% of retail customers that are kind of engaged at the moment.
Well, you raised a couple of very important points I think we should pick out for the audience, which is the fragmentation, the number of protocols or blockchain ecosystems around, and again, some of the issues around permission blockchains in tier one institutions run contra to the benefits of blockchain, which is the pooling and the interoperability of data, and then particularly liquidity collateralization. If you're focused on things. So I call that Token Island, and I think we see Token Island now is starting to get connected up in a better way moving into 2025 to help things move along. That's an excellent point. So Stella, what are the big technical innovations that you're focused on now that we can expect coming into the market next year that are really going to power on adoption?
So our main role is really to help the financial institutions to be connected not only in the domestic market, but also internationally cross-border. So for example, we are onboarding our first financial institution here in this part of the world, Emirates NDB, in order to help to power EMBD to be able to do cross-border offering the solutions to their clients in this part of the region around the world. So what we are really doing is really helping the traditional finance to look into how they can manage their projects implementation from technical perspective, and also emerge with the new world requirements and customer requirements. You mentioned earlier, both of you, about the customers' confidence, whether from the retail markets of customers or from the wholesale FI of customers. So a lot of these digital assets, when they scale, it also needs to meet the regulators' requirement in terms of compliance, risk assessment. Every jurisdiction has different pace into doing that. And how a technology provider and platform provider like Partio can we equip all this information, helping them to do cross-border, because when they're in different pace, it will meet a lot of challenges in trying to do the deal in different places. So the financial institution is also looking into diversify their investment portfolio and helping their clients to look into different markets. So this is where we come in to help them to integrate into domestic markets, integrate between their traditional finance systems and the future decentralized finance systems. So a lot of time we are coming in to play the role of how we can partner with the whole ecosystems, not only with the financial institutions, but all the other partners, potentially like Zumo, into the area of how we can connect together globally.
So if we again, getting back to the interoperability leg, I know that there's always sometimes so much attention on the retail market. It's a bit disproportionate from my perspective, but I've got more of a capital markets bias, and things like fragmentation come up. Clearly, compliance is an issue. Self-custody always comes into the question, but you're looking at the real benefits if you're an asset manager or a bigger bank. Collateral eligibility is probably one of the bigger things we see, as some of the benefits coming into 2025. And maybe, Nick, I wonder if you could give us a balanced view where you see that going across retail or into wholesale markets, and some of the other innovations popping up that are going to help us get through this and help solve some of the custody and settlement issues that we see.
Yeah, I mean, again, probably look at it through a sort of regulatory and tech nexus kind of a moment. So if you look at something like real-world asset tokenization, for example, absolutely key to those platforms now beginning to succeed is baking in the ability to have kind of bespoke compliance elements to the smart contracts that they're based on. So that's how you answer the question of a regulator who's concerned, who's maybe in the in the UK digital security sandbox is pretty nascent. It's only been up and running a pretty short period of time. There's not that many companies that have been running through that program.
This is the Bank of England security sandbox, which is pretty amazing innovation.
Yeah,
Bank of England FCA.
Yeah, but there's great. So to me, they'd be able to answer those questions, and why should real-world assets be available to retail investors? At the moment, they're only going to be available to professional investors in the UK. Key to that will be the tech being able to align with the regulatory requirements and build those in, so that the regulator has confidence that those assets have parity, or maybe even better parity, but better than parity from a transparency point of view, than the kind of the TradFi options. So I think a lot of this comes down. The tech is kind of there, right? That there's lots of companies that can tokenize an asset for you. There's lots of companies that can. I'm going to put inverted commas around issue it, because they can mint that asset. Can they actually issue it in a compliant way in most markets? The answer is no. That's why most of those platforms haven't grown in the way that they could. So what you're starting to see now in that particular subsection is the winners in that tokenization space are the ones who understand how you bake compliance into the product, so that when companies like us go to the regulator with a real-world asset tokenization platform, you're able to say, yeah, the token in the UK market, the token in the UAE market, the token in the Singaporean market will align with exactly what's happening on this type of security in your space. So to me, again, it's that, as I say, I think most of the tech innovation has been done in that particular space. It's about now how you get it to work really, really well, and removing the barriers. And most of the barriers now, back to Stella's point, they cross this interoperability point of view. So do they interoperate with other systems from a tech perspective, and do they interoperate with how the regulator sees the world? And it's definitely moving in the right direction.
Well, and you raise a good point. I mean, for the benefit of folks here that don't know what the Bank of England Digital Security Sandbox does, given the FISMA Act that was pushed through Parliament last year, the sandbox can take in firms, and if they feel they need to change legislation to ensure that securities can be issued digitally, they've basically got the mandate to do it, which, boy, I think that's pretty progressive in its own right. But I know, if you look at MAS and Project Guardian, they're focused on smart contract standards for that reason. The question is, how much of the regulatory compliance can you actually build into a smart contract in the ecosystem? So we'll watch this space in 2025.
Yeah.
Right, we've got a couple of minutes left for each of you, and so we're always hearing. Well, we've heard a lot about crypto over the last 15 years. Spectacularly with FTX, becoming bankrupt, and now things have certainly recovered. And most of you have probably noticed it's a bull crypto market in the U.S. after the election, so we're paying attention to that. But let's talk about FIs, financial institutions. Beyond all of the tech innovators and crypto protocols, et cetera, what role do FIs need to play in really accelerating this RWA, tokenization world we're heading towards?
You have rightly mentioned about that the world is emerging. So it keeps evolving to change. So the traditional FI institutions are also looking into ways on how to diversify their investment, and also how to serve their clients better, so that the clients can enjoy faster, cheaper, and also more transparencies in the investment itself. So a lot of these financial institutions are going through the phases of how they can combine their traditional assets with the digital assets into that area. So it's still a journey. It's still a journey for them. However, because of these are licensed financial institutions, therefore the trust of their clients is there, very important. And also for them it's very easy for them to look into they will tend to come very strongly from the compliance and risk perspective, where the customers can have confidence in their product and services. But ultimately, it will still be a major collaborations between the FI, the technology providers, the suppliers, and also the regulators to come together to define the framework for the markets, not only within domestic, as Nick has rightly mentioned, between the US market, the Middle East market, the Asia market. How can everybody come together? Because there's a phrase that we probably have heard, many of us have heard: if you want to go fast, you go alone. if you want to go far, if you want to scale your business, you have to come together as a community. Otherwise, you are just building a solutions or offering a product just within the domestic market, within the small group itself. But in order for a longer term, you have to come together as ecosystems and community together.
Yeah, you know, it's difficult for me as the chair of a not-for-profit open innovation community that has a lot of the tier ones and the larger protocols in it to say this. And, you know, Nick and Zoom are members, so I'll tee it up. But I would say in this space, we've got a great degree of global collaboration on innovation and advocacy with the regulator to try to move this on. So institutions do hang out with crypto protocols and all sorts of people in the community because we're actually all working to try to move it on. And you see that a bit more in the community in London we have, Nick, but you want to comment on the role of FIs and you know, some of the things we might be seeing coming up next year and getting them engaged in what we're doing?
Yeah, and I'll just give quite a specific example. So in the incoming European regulations, we have the first set of ESG sustainability indicators anywhere globally as part of any regulatory regime for digital assets. And that is massively important on a number of levels. So not least because blockchain is great, but it uses lots of electricity, and there should be a company should have to report on the amount of electricity it uses, and ultimately they should have to mitigate the electricity it uses. That creates alignment with the broader financial services sector, certainly in Europe and a lot of other jurisdictions. So that's coming into play. That has been driven by the fact that ESMA, the European regulator, wants to align the digital asset space with what's happening in traditional asset management. So when the Bitcoin ETFs and ETPs launch in Europe, they will have to comply with Article 8 and Article 9 of the SFDRs. They will have to provide those sustainability indicators. And that's important for real-world adoption. It's also very, very important for consumers because although they're not directly buying into this space, young people are extraordinarily interested in making sure that things align with ESG principles because they're the people who are going to be here in 50 years, 20, 30, 50 years' time and living with the consequences of climate change. And sorry, I know we're on time, but just to wrap up, we're also on the verge of this enormous transfer of wealth from people who are not digital and don't care about the environment to people who are only interested in digital stuff and do really, really care about climate change. So it's just a great example of, though, you know, regulation, upward and downward pressure coming together to create change and alignment with what's happening, you know, with the global macro.
I love that. I'm going to speak to ADGM to get my 14-year-old daughter here next year because she loves what you've just said and fully gets a lot of it at 14, which I'm impressed by. But Nick, thank you. Stella, I'm Lawrence Wintermeyer from Global Digital Finance, and I'd like to thank all of you being so patient and listening to us today. So thank you.
Thank you.
Thank you.
John.